Welcome back. Let's invite the management of Ganesha Ecosphere on the company. This is a company which recycles your plastic PET bottles into polyester fiber or polyester yarn, which is a variety of applications, very versatile applications in textiles, etc. So that's what the company does. They reported their Q4 numbers, and on a year-on-year basis, we've seen the company's top line grow by 1.3%, while margins too have expanded. So from 11.2%, margins now stand at 15.4%. So more than a 400 basis points margin expansion. We have with us Gopal Agarwal, the CFO of the company, to take a few questions for us. Thank you very much, sir, for joining in. While on a quarter-on-quarter basis, we've seen a decent revenue growth of more than 7%, on a year-on-year basis, your top-line growth is only at 1.3%. And even for the full year, in FY24, you've clocked in a top-line decline. So first, if you could tell us what led to the weakness in FY24, because of which the company's top-line degrew, and also the way forward, because you are talking about growth in the coming year, FY25. So are we looking at a single-digit kind of growth, or do you think you can accelerate to a double-digit growth?
In our legacy business, where we are manufacturing the recycled PSF and recycled yarn, so there the prices has come down by about 15%. So there is no volume degrowth, but because of the price sliding, our turnover has come down. But for our Warangal unit in our subsidiary has been started and the revenue has started from October 23 onwards. And so we are, for FY25, we are looking for a growth of about 50% in top line and bottom line.
Sorry, 15% in top line and bottom line, right?
50-60% growth in top line and bottom line.
50 to 60% growth in top line and bottom line in FY25. So you spoke about how your legacy business is under pressure. So just for our viewers, what percentage of your overall revenues or top line comes from the legacy business, and your new business, what are the key drivers?
So for FY25, our new business will contribute about 60% in the about 50% in the sales and 50% from the legacy business.
And, okay, got that. And what's the difference in the growth that you anticipate for legacy business and your new business in FY25 to arrive at this 50-60% growth?
The growth will come from the new business.
So will legacy decline?
So yeah, legacy will remain at about 900 to 950 crore.
And Mr. Agarwal, for the benefit of our viewers, can you just describe the segments that go in legacy business and the ones that you describe as new business for you?
So new business, until we are into the textile business, we are making the recycled PSF and recycled yarn in our legacy business. Now we have turned to the repackaging business, where we are making the food grade recycled granules which are used in making the beverages packaging.
Okay, so you're saying that you will see a top line growth of 50% this year, and the new business will see an uptake and it will drive that growth. Can you give us some idea about volumes and also pricing in both the businesses, the old and the new, and how that's moving, what your expectations are for this year?
So the pricing is about 15 to 20% higher in new business.
Okay, and this is as in you're talking about FY24, Q4, or over what period is this higher by 15 to 20%?
Yeah, so we are talking about the present Q4, from Q4. The Q4, the average realization of our legacy business and the new business is about 15-20% higher pricing we are getting in the packaging business.
Okay, so what's the difference in your margins for the legacy versus the new business?
So from our new unit in South India, in Warangal, the overall EBITDA margins we are looking for about 24%.
In the new business, your margins are 24%.
24%. In our legacy business, we are making the margins about 11% plus.
Okay, so midway between the two should be your margins for, so 17-18% could be the margins for FY25 on a blended basis?
It would be around 15-16%, 16% around.
15 to 16%.
Okay. What about expansion of capacities? I mean, how much capex are you putting to work this year? And just give us an update on cash levels in the company and debt levels as well, if any.
Yeah, so we are already having capacity of 28,000 tons for our rPET granules, which we are increasing to 42,000 ton in the current financial year. And after that, we are also planning to make some expansions in the capacities, but that are yet to be finalized. And we will come back with whenever it will be finalized.
Okay. Sir, I remember in an old conversation you'd spoken about even a QIP to fund your capex. So are you looking at any fundraising initiatives?
No. We have recently raised the funds through QIP. We are not going for raising any fund to equity market in near future.
Oh. Okay. And how are exports doing for you?
Sorry?
Exports.
Yeah. We are making export about 11% of our total revenue.
And are you looking to scale that up? How is the overseas market for you in terms of demand?
We are looking for good business opportunities in Indian market itself, domestic market. So we are not focusing on the export market.
Got it. So if 3 years down the line, so this year, perhaps your top line growth will be about 1,600, 1,700 crore rupees. Given the way business is shaping up, your capex plans, which are, the capacity expansion which is coming up, can you give us some 3-year picture for the company? How would it look like if we talk to you, about FY27?
Yeah, so for next 3 to 5 years, we are looking for a top line growth of about 25 to 30%.
25 to 30% CAGR.
Yeah, CAGR.
Okay, and how would the mix of the company change?
So our focus is now on the new business. So our capacity enhancement would come in new businesses only.
Got that. And will there be a further improvement in margins, or 15 to 16% is it in the next 3 to 5 years?
Yeah, our margins will be around that.
Got that. Are you looking at any acquisitions, or will there be any efforts on that front?
Yeah, we will be taking it whenever an opportunity comes to us.
Got it. Thank you. Thank you, sir, for joining in. That's Ganesha Ecosphere telling us what happened in FY24, how the legacy business is witnessing some pricing pressure. So the company's top line de-grew last year, but the company is going to bounce back. 50 to 60% is going to be the revenue growth in FY25. But over the next 3 to 5 years, the company is targeting a top line growth of 25 to 30%, on a CAGR basis. Get into a break. On the other side, we'll invite Jay Thakkar of ICICI Securities to take a few trading questions.